So traders, this video is actually more of a technical analysis of an investment portfolio. And so I'm just going to make my case to you. I'm curious as to what your feedback is. So first of all, obviously we had Berkshire Hathaway had their annual shareholders meeting. It was amazing. But I found this portfolio, which is very, very nice. This is a breakdown, but a couple of disclaimers. First of all, it's a little bit out of date. This one is for 2023. There we go, as of 14th of February. But I do know that subsequent to that, especially which was spoken about at the shareholders meeting, I do know that Activision Blizzard the exposure has been reduced, and potentially a few others. But this should, in general, be a pretty good assessment of what that breakdown is. I will put the link for it in the description. I thought if you're interested, you can go and look for yourself. You can see the exposure, the weighting to a certain degree. So what I did is I go over to the platform. I'm doing this on Pro Real Time. Sometimes you guys ask about that. It is included in the description anyway, and I added a few of those in. Okay, so one of the things that's interesting is that Apple is a much bigger component of that. That is the wrong hotkey. A much bigger component of Berkshire Hathaway than it has been in the past. And what you're seeing here is a weekly chart. So this is an interesting thing because what do the technicals say about it? And the best way to do that, I think, is to look at a very successful investor's portfolio and then look at the technical performance. And so all we really have here, very simple, is a weekly chart. What I'm looking for here, generally speaking, is price to be above the moving averages and to not be too erratic in its behavior. If we zoom out and we go back several years, you can see the price in itself is continuing to climb higher. And if we look at it currently, this is being recorded in May 2023, and you can see here this is just close to that. We're heading towards the debt ceiling issue. I'd be very surprised if they default, because they have the option not to. They don't have to default. It's just if they're forced to default. So it's a really bizarre situation. I don't think that's going to be the case. And I think if it did, it would rock the planet. So I just don't think that's going to be the case. I think sensible minds will prevail. And so I'm expecting this to continue up, but we do have all-time highs here. It looks really good. So Apple looking fantastic. Then we look at Bank of America. Now this I don't get, okay? If I go through and have a look at this, I really just don't get. It is generally performing higher. For the moment, it is generally more bearish. So it's not terrible, but it is generally more bearish. And, it goes back 2017. If we go back looking at this, it has generally gone higher, but it certainly hasn't been climbing much since 2022. That's normal, okay? It's still looking bearish, still hasn't turned around below the moving averages, so it's still bearish. Okay, fine, not terrible. Chevron, not looking that bad either. Okay, you can see here it's generally looking nice and bullish. It's not a massive performer for a very long period of time. If we look at that, it's been flat for many years, going back to 2011, going up. It's not terrible. But it's okay. Coca-Cola, we already know. Coca-Cola is already a star performer, so not a problem there. Then we look at Amex, we're looking at American Express. And here you can see most of the stress that Amex is going through is just going in the last kind of November 20, sort of, let's call it 22 all the way. And it's kind of drifting sideways for the most part. Not terrible. Overall, you can see its general history, aside from COVID, has been nice and positive. Then we look at Kraft. Kraft is climbing higher. So in other words, Kraft is in an uptrend. It is bullish at the moment, but if I look at its historical performance, it's not like it's since inception, it's always been performing well. Okay, I would just mention that. But it is slowly creeping. It's not a star performer compared to the others. Occidental Petroleum, no. To me, I'm not really. Look, remember that there's always dividends, and then there's obviously increase in value. But for me, my logic is this: if I wanted to buy a property that would give me rental yields, that would be the equivalent of dividends. But here's the problem: if I buy a property in a bad area, or the property is neglected and it loses value, and there's inflation, I'm going to effectively go underwater, because even though I'm getting good rental yields on it, potentially that's actually going to get bought down by inflation, and as well as the value of the property, and eventually I might sell the property at a loss and not really make so much money on it. So the perfect scenario, if I can, is to buy a property at a good price that gives good rental yields in an area that continues to increase in value, and the property itself increases in value. That's really the goal, I would think, of most sensible property investors. So this to me doesn't qualify. I'm not really sure if dividends alone is a reason to get involved. Not really super impressed. Moody's, not bad. Okay, so Moody's, not bad at all. Its overall performance, you can see here at the bottom, has continued to climb, and it's currently looking nice and bullish. So pretty happy with that. We've got Activision. So here's Activision, and you can actually see it's been going pretty much sideways. And of course, the idea was that because of the conflicts between the US and China, there's some concerns about, although in principle, Berkshire Hathaway love doing business and they would love to do as much sort of collaboration between China and the US, it isn't necessarily possible, and therefore they've reduced their exposure in that. So HP. Okay, so HP doing relatively well. It's actually producing a bit of a bullish formation at the moment. It's looking nice and bullish, and historically it tends to be climbing. So that's a great one. So it's not really so much about all the ones that, this one's more volatile, for example. So Davita, this one is actually much more volatile at the moment. It's gone bullish at the moment. It's having a good season, let's call it that. But you can see historically its performance has not been as good as some of the others. You've got Verizon, which has generally performed well and now predominantly going sideways, which could be for a number of reasons that you can go and investigate. Potentially it's just expanded and it's now market saturated. We'll see. Or it could still be market dominant, but there you have it. Citigroup. Okay, so Citigroup, to me, again, this is not a winner in my mind. If you compare this and we just jump between Apple and Citi, they're two different things, okay? They're just two different animals, and I don't really get that. I do understand that Buffett loves the idea of banks because they're often obviously so, joined at the hips with central banks that it's very difficult for them to fail. But I also think that the way that regulation is going to change now to essentially prosecute or penalize banks who handle their customers' money versus shareholders who choose the shareholders over the customers, we're going to see that starts to change. The culture of the trickle down and bailing out banks and all that kind of thing is not really, it's going to change. I don't think it's going to stay here necessarily, certainly not with the current climate. And so I don't really see the value in that. If I was buying it, if I was limited, if I looked at this entire list and I was only able to put money into half of these, this just would not be on that list. Okay, Kroger, great. Overall, love the performance of it, and it's been generally climbing higher since 2017. Great. Visa, no-brainer for me. There's Visa, and actually that immediately adds in MasterCard. So if I just go further down the list, we've got MasterCard, it's the same kind of thing. Then we look at Liberty, and I prefer, look, that's a longer explanation for a different video. Then if we have a look at Liberty Media, that's good. I mean, it's not a massive growth curve, but it is generally bullish, slowly but surely increasing. General Motors is a no-no. Now, the joke is that if you think about it, General Motors should have been leading the way with electric vehicles. They were in the best position to do it and just didn't do it. So I'm disappointed for that because of that. But anyway, what are you going to do? And that is a no-no from me. So I would absolutely not have this. So just remember that my frame of reference here is if I could only afford to buy shares in each of these, ignoring Berkshire Hathaway, because now I can look at Berkshire Hathaway's exposure and I can not engaged in their worst performers. And these are not just worst performers of the last year. It's like the worst performers since inception, or at least as far back as the history goes. Sorry, I shouldn't say since inception. It's as far back as the data goes, which is probably 10 to 20 years. Paramount Global, absolutely not. This is garbage. So, no. MasterCard we spoke about. AON, great. Beautiful. Absolutely beautiful pedigree. Charter Communications, no. Okay. So, Amazon has taken a big hit. It's managing to look more and more bullish now. Amazon I really love. For me, that's a big buy. Personally, that's my personal preference. But I'm looking at this and it looks like it's continuing to lose value. Like it's one of Donald Trump's media companies. It looks like it's just tanking at the moment and heading lower. So what I would need to see here to believe that it's turning around is a break above these highs. But it wouldn't be a buy at this time. I would just set an alert and just get an alert if we see it break to the upside. Then I would look at the possibility of it increasing in value. I'm especially happy with banks that have performed well over the since COVID. They're the ones that I think, if they can survive COVID and a market recession and all kinds of an inflation, they must be performing relatively well. This one, no. So this is another bank as well. And I get that. Historically, it's made sense. Because remember, Buffett's been investing from before I was born. So I'm not arguing with his wisdom and experience. I'm just saying that when I look at the technical criteria, when I'm looking for it, this doesn't qualify at this point in time. And I'm looking for 2 or 3 years of really good behavior. This is insane. So this is Smackerson Core. This is insane. Amazon is looking good to me. I really like this higher low, higher high here. It's looking more and more bullish. Doesn't mean we're out of the woods. Amazon took a big hit, but we're still using Amazon. If anything, we're using more and more. So it's everyone. I'm by the way very happy if there's something missing from this list that I've excluded. Please tell me if I've got I don't believe I've got the wrong tickers, but if I have somehow, then please let me know. If you've got any comments, I'm absolutely open to that. I'll always just do an update on the video. Snowflake's interesting to me because it's not really been a great performer, but it is looking bullish. It's looking as though it's starting to turn up and go higher. So that's interesting, but the history doesn't look good. This one as well, also not looking good. I mean, if you look at it going back to 2019, there's not much happening there. Johnson & Johnson, you all know that. Johnson & Johnson's actually looking quite bearish at the moment. So I'm watching it. It should continue to go up from here, but it's looking more bearish than it should. So interesting. Marsh & McLennan looking great. Very, very nice at this point in time. Procter & Gamble also looking good. Liberty Latin America is a no. That's a hard no. That's garbage. And again, I look at that and I go, well, then maybe I must have got the ticker wrong, but it seems, you know, so if I have, I'm embarrassed, and obviously I'm sorry about that, but no, I don't believe so. This looks amazing. Holy cow. Mondelez International. Then we've got like Spider, we've got the S&P 500. That's fine. It's a safe, that's a good one. Vanguard's S&P, so to distinguish that from the growth ETF, also looks good. Very, very similar. We've got JP Morgan Chase, which is okay. It's not super wow, but it looks okay. Then we've got Wells Fargo, which to me, again, it's Moody's. It's the same thing. Well, actually, Moody's was a better performer, but this is like Citibank, not performing super well. And I've got friends who buy into BP and Exxon and oil companies. And actually, when I look at Shell and BP, their returns have not been great since the year 2000. But people still buy into the idea. They're buying into the concept of a bank being safe and dividends. And then but it's a rationalization when to me the value doesn't really appear to be there. US Bank Core, absolutely not. No, this thing's peaked in 2021, and it really hasn't done a lot since then, and it's still very bearish. It might come back down, and then the logic would be you can buy it at half price, and if it does recover from this point, then you go up. And I think that's fine. I mean, I guess I'm looking to see really good returns within 2 to 5 years rather than potentially open-ended 10 years. And I think a lot of these are easier to identify as ones that should perform well within a year, as opposed to this one is a wait and see, in my opinion. Anyway, and UPS, that's an old one. I think a couple of these are old ones, but that one's kind of going sideways. So I'd be interested in your feedback. I just wanted to run through them so that you can kind of put a chart to the name, and see that some of them aren't really that great, and a lot of them are outstanding. And obviously the ones that are outstanding just carry the rest. But my question is always going to be, you know, kind of what happens? Are you in the banks that aren't performing well because in the situation where there's World War III breaks out or something absolutely crazy, is that what's gonna save you? I'm just curious. I'd love to hear some feedback on that. So guys, thank you very much. I'll leave you with this, and let me know your thoughts.